You can have a 700 credit score and still get denied. Here's why. Now, my name is Kenny Johnson. I'm a credit specialist here in Canada, and we actually help Canadians fix and rebuild their credit. If you need assistance with your credit, you can always email us info@kennyjohnsonuniversity.com. Now, unfortunately, having a 700 plus credit score is kind of like a buzzword. It's kind of like having an Amex credit card. People think that they've made it once you have an Amex credit card, and it's very similar. People think that they've made it once they have a 700 credit score. But I've seen so many applications still get denied even with a 700 credit score. And so you need to know how to navigate this before submitting another application so that you don't waste an inquiry. And so one of the first things that people make a mistake on is that they don't truly understand how important their income is when it comes to applying for credit. So, for example, okay, we have to be realistic about our income. We have to be honest about our income because it's very important that you're honest about your income. But if I'm going to go out and apply for a loan, okay, it's very important and it does differ from loan to loan. For example, it doesn't make sense that you can get a student loan, especially if you leave Canada and go to the States and study. It doesn't make sense that you can get a six-figure loan for student loans and you're not even making money because you're a student, or maybe you're making part-time money or minimum wage. It doesn't make sense that you can get approved for that. It doesn't make sense that some people get approved for mortgages that are way outside of their means. But if you're applying for a credit card or a loan, is they're going to take this pretty much more logically, in the sense that if you're applying for a loan and let's say you're going for a $100,000 loan, but your annual income is only 60K, the odds of you getting approved for that are extremely low. And so I see this happen more times than not. People overextend themselves or they try to ask for more than what they're actually capable of being able to be responsible for. And so when we're applying for products or submitting applications, we have to know realistically what our DTI, our debt to income ratio is, what our annual income is, and how much we're actually able to allocate towards that debt, because underwriters are also going to be looking at this information. And if you ever had to deal with an underwriter, they're going to string you through a streamline of so many questions to get a full understanding of your financial situation, not just your credit score. Next, your average credit age plays an important part in you being approved. Again, a 700 credit score, in the reality of things, it doesn't really mean much. And so many people don't understand the important role of your credit age. And so you can actually have a 700 credit score, but you've only been playing the credit game for 6 months. But you can also have a 700 credit score and you've been working on your credit for 5 years. These are two entirely different profiles. The individual that has a 700 credit score with 5 years of history, that's 5 years of on time payments versus the person that maybe only have 6 months of on time payments, let's say, or working on their credit. And so, what are the true differences between these two accounts? One, we have the on time payment for 5 years, but then two, we maybe have a diverse mix in accounts. So, that person that has the 5 years of credit, they probably at some point had an auto loan, maybe they had a mortgage, maybe they had a few credit cards, not just one. But the person has only been working on their credit for 6 months. From my experience, they're probably just starting out. Maybe they're a student, maybe they just graduated and they're just learning about credit and they probably only have one credit card. If you're a lender, if you're a bank, who are you more likely to lend to? Is it the person that's only been working on their credit for 6 months or the individual that's been at it for 5, 6 years? And so when we're working on or we're building our credit profile, age plays an important factor. And typically, this is average credit age. So, anytime you open a new account, this is going to have a negative impact to your average credit age, but it can be offset by you keeping accounts open. So, for example, I've had credit cards open for years and I have no plans on closing them out. If you have a credit card that has an annual fee that you're not a fan of, you can always downgrade to a credit card that has a $0 annual fee. That way, you don't have to lose all the history associated with those accounts. Believe it or not, you could have a 700 credit score and have high utilization. Now, typically, what this looks like is someone with a very diverse profile. They have an extensive credit age, but all of their credit cards are maxed out, right? And they're kind of like at their next end with debt. Like they're probably making all their minimum payments every single month, and those credit cards are accruing interest. A lot of times, so where the credit cards actually pass the limit. Let's say, for example, the credit card is the limit is $1,000, but the balance is 1,200. And usually that extra $200 that we see is pure interest, right? And so these are the individuals that can have a 700 credit score. And you may say, how is that possible? Well, understand credit mix plays a huge part, but they probably have never had a late payment. Some people literally just make the minimum payments and they live their lives. And so when we're building our profile for success, we want to ensure that we're also keeping our utilization extremely low. We don't want to carry high balances, and we don't want to have debt that we can't maintain. I see so many people with mortgages that they cannot afford. And I'm gonna be honest, I don't know how lenders are approving these mortgages, but it just doesn't make sense. Lastly, before I end the video, it's important that you understand that lenders do not care about credit scores. I know we put so much importance on the number, and even myself, like when I market the progress that our clients make, we do use the numbers to show the progress that clients make, and that's because we understand it. And most people don't really understand how credit works, but we understand that it is going to attract people into the business, but when you're truly building a profile that's going to allow you to get approved for credit, and you want true access to credit, I'm not talking about the people that are just trying to get $1,000 credit card. I'm talking about people that are actually trying to get at least six figures in capital. Maybe you have a plan to do business with it, or a plan to do remodeling on your personal home, or whatever it may be. Then you want to make sure you're building your profile to be a strong profile. That means a profile with an extensive credit age, long payment history, a diverse type of accounts, not just credit cards. Maybe you had a loan at some point, different type of open accounts that have reported. But that's what lenders want to see. You always want to try to put yourself in the situation of an underwriter. Maybe you're trying to get a line of credit. Line of credits. I've seen people get high amounts of line of credits. I've seen people get $30,000 to $50,000 limits on a line of credits, and and it's so easy, but people don't even know that this is even possible for them to do so. And so once you get access to that credit can actually be a safety net for you, and you can leverage it in different ways. Like I alluded to earlier, business. Credit has helped me enormously, whether it was running ads, running campaigns, or even bringing on new teammates to help me build my business. Credit has been a huge pillar in me being able to do that. And so, in the end, we want to build a strong profile and not just focus on a credit score. If you need help with your credit and you're dealing with, let's say, collection companies, charge off accounts that you paid off and they're still on your credit report affecting your credit, send us an email, info@kennyjohnsonuniversity.com, and we'll be happy to help. And until next time, peace.